Good morning, ladies and gentlemen, and welcome to the Brighton Pier investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just please simply type in your question at any time and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard, and we'll send you an email when they're ready for your review. Before we begin, we would like to submit the following poll, and if you would give that your kind attention, I'm sure the company would be most grateful. And I'd now like to hand over to John Smith, CFO, and Anne Accord, CEO from Brighton Pier. Good morning.
Good morning. Good morning, everybody, and welcome to our introduction to the Brighton Pier Group. My name is Anne Accord. I'm the Chief Executive Officer, and I have with me John Smith, who's our Chief Financial Officer.
Hello, everybody.
So, if I can just take you through very briefly our group. We have 4 divisions within our group. We have Brighton Palace Pier, which I'm pleased to tell you all is still standing very strongly despite 112 mile an hour winds a week or so ago. Brighton Palace Pier, which we acquired in 2016 for £18 million. I'm sure many of you know the pier, but we're the 4th most visited tourist attraction outside of London. We have up to 4.9 million visitors a year, and we have a very diverse offer between arcades, rides, and food and beverage. And I'll come back to all these divisions a little bit later on in our presentation. Eclectic Bars, which was our original division, 8 premium bars which target students and young professionals, and you may well have been to some. We're very well established brands in London like Embargo Republica, Le Fez in Putney, and we have several Lola Lows around the country. We recently divested some of the bars to concentrate on what we see as our core bar portfolio, and all our bars that we have now in this group are profitable, and we're very happy with the position they're in coming out of lockdown. In 2017, we acquired Paradise Island Adventure Golf for £10.5 million. We have 8 indoor mini golf sites, all based in retail shopping malls, all next to other leisure activities. It's a very well invested business, a very simple business, and we've opened 2 sites since acquiring the division, and both are trading well above our expectations. The newest member of the group is our theme park near Ripon in North Yorkshire, Lightwater Valley, which we acquired in June 2021. Although it sits in the countryside, 175 acres of very beautiful countryside, it has a potential catchment area of nearly 5 million people within very short travelling distance. It's a well invested site. It is a mixture of country walks, rides, diverse attractions, food and beverage offers, and is trading, for the short period in which we've owned it, well above our expectations. If you see, just very briefly, I'll touch on the revenue split, which you'll see on the screen there. That's 2019 and just shows the division, but I can update you since Lightwater was joined. And the split really is Brighton Pier 43% of revenue, Lightwater 16%, Eclectic Bars 24%, and the Golf Estate 16%. So you get an idea of what each contributes to the whole. As it says on the bottom there, entertainment is our business, and we're very proud of our group. We move on to the next slide. We see the long-term attraction of family entertainment. You've probably all heard of competitive socialising. You've heard a lot about the focus on staycations during the pandemic and since. And we firmly believe that the family entertainment business is where we sit and where we wish to grow and develop. We have a very diversified asset base, and we have benefits of scale. Even since we've acquired the Golf and Lightwater Valley, we have not increased our head office numbers at all. We've managed to carry out all the functions for HR, accountancy, everything that you would expect a central function to perform without increasing those numbers. We believe we've got the potential to substantially drive growth organically. We look within. If you look at the pier, and again, I'll touch on this later, how much we've invested in the food and beverage offer and how much that has grown over the past couple of years. And we have a huge amount of experience on our board, backed by some very key shareholders. I'll come back to our valuation later on in the story, but now I'll just hand over to John.
Yes, we recently, I'll just move the slide. We recently, on 17th of January, released a trading update on the period ending in December. And it's been a very strong period for us, benefiting from the tax benefits on VAT and also some additional rates benefit as well. But on the sales basis, we're up 31% on the pre-pandemic levels, going back to 2019. So it's a significant uplift. And that's split across the various divisions on a like-for-like basis, with Brighton Pier 15% up, Golf division like-for-likes up 33%, and the bars division only opened really from the end of July, up 27% on 2019. Obviously, this is very strong trading for us. Like Water Valley, also we had the summer period from the end of June through to the end of September, and again, it's traded very strongly and way ahead of expectation. The group has, as a result of these operations, strong cash flow, and I think it's well placed for the full year. In terms of the detailed results, we'll be announcing on the 28th of March our results, detailed results, which are currently being prepared at the moment. This slide we've just put in here to give some feel for the size and the scale of this leisure spend, and particularly the leisure industry generally. And what you can see from here is that the expectations from Knight Frank is that there'll be a 40.6% surge in 2021 and a 36% increase in 2022. And the total kind of value of this market is around about 3.9 billion extra to what it was before. So I think it shows you that as we emerge from the pandemic, there is significant opportunity in this market.
Thank you, John. So I'll just, on our next slide, we have a little bit more detail about Brighton Palace Pier. 123 years old, and as I mentioned earlier, still standing strong. We spend over £500,000 a year on the substructure.
Which comes out of EBITDA.
Which comes out of the EBITDA. So fully expensed through the P&L. And the substructure withstood winds of up to 112 miles an hour over the last week. So we're very pleased with how we've actually cared for the pier substructurally. Again, above deck, we've invested considerable amounts in the food and beverage offer and in rides. So the pier is well maintained, and it's a very reliable generator of cash. During the post-pandemic and in between the lockdown periods, across the country we saw a growth in staycations, and we benefited very much from people staying locally during this period of time. And we managed to build a relationship with our local population that we probably previously didn't have. And I think that bodes well for the future, that we can build on that. We've invested in new rides, and 3 years ago, we invested £1 million in our food and beverage offer. And we've seen above growth in that field. We have a brand new restaurant, Palm Court, and we also invested in the 2 bars, all of which have performed very well, both post-pandemic and prior to pandemic. We introduced enhanced EPOS technology to give us what we never had before, which was better customer data, so we could understand who our customers were and how we can maximize any revenue opportunity that we may have, whether it's from visitors from abroad. And in a normal summer, outside of pandemic times, during the summer period, about 40% of our visitors came from either Europe or the United States. and that was replaced by UK visitors during the post-lockdown period. You will have read, I'm sure, lots of comments in the press about cost price increases since Brexit, since the pandemic, and we have effected price rises to offset these inflationary pressures. Eclectic bars. We sold our non-core sites and we now have 8 profitable sites in key locations. They performed better than we'd expected and emerged very strongly from the pandemic, given that they were closed virtually for 15 months. Again, very good cash generation, well invested, and are performing well above our expectations currently. Paradise Island Adventure Golf, which, as I said earlier, we acquired in December 2017. A very simple, high margin, easy to run business, and in the right location, hugely profitable. We appeal to families. We don't have high technology here. It's a very simple offer, and when located near other leisure facilities, does incredibly well. We like to be situated near cinemas. We get a lot of pre-cinema and post-cinema visits, and we attract all types of families, whether it's grandparents and grandchildren, parents with children, or teenagers. We have expanded to incorporate bars and arcades into our existing spaces where possible, and at our 2 new sites at Rushden Lakes at Northampton and in Plymouth, we have a full food and beverage and bar offer. These new sites have delivered very rapid return on investment within 3 years. And the new member of the family, Lightwater Valley, 175 acres, bought during the pandemic for £4.8 million. Our return so far is way ahead of our expectations. It significantly exceeded my expectations, and I'm very pleased at what we can build on going forward. We have lots of opportunities there to diversify and expand and drive both the organic growth in what is a very huge space.
And also a very long lease,
yes.
79 years.
Yes, it's a very long lease. And we like to look for businesses that we know we can improve. And certainly there is a huge opportunity to improve, particularly the food and beverage offer at Lightwater. I'm sure the previous owners, and certainly they did agree with me, that it could have been a lot better. So we have a whole plan in place under the strapline What's New in 22 for Lightwater, and we are introducing more rides, better food and beverage. We're improving the offer on the golf. We're improving the offer on our treetop nets, which is a little bit like the Go 8 offer that you might be familiar with. We're introducing new mascots, and we're putting an enormous amount of energy into ensure that Lightwater has the very best season possible going forward.
This slide is really just designed to draw your attention to a few important things about our business. Firstly, we own it's a virtual freehold for Brighton Pier, and obviously we have a long lease of 79 years on Lightwater Valley. The asset base is shown here at 39 million. Bearing in mind the market cap currently is 31 million, it does give you some indication that the value perhaps of the business is more than we're currently priced at. Our current PE is around about 14.7 and PE ratio, and we've had some pretty good success over the last few months with our share price, which has risen from 34 at its low to 95.5 at its height, and it sits at around about 82p at the moment. In terms of bank debt, we have a very conservative approach to bank debt. I think when we're buying something, we might go up to as much as 3 times. We're currently around about 1 time geared, and we have focused this year using the money we've drawn down to repay our sea bills and also to repay all the money we borrowed to buy Lightwater Valley. And we've fully repaid all that money. By the end of the year, we expect to have paid back 7.7 million in debt, reducing our borrowings by about 38 million. So that's a gross debt was 21 million at the beginning of this period, and we expect it to fall to 13.6. In terms of EBITDA, all of the businesses are very high margin. The bars we achieve when they're all open about 80%. The pier is 84%. The golf is 98%, There's not a great deal of costs associated with that. And like Water Valley is 90%. So as you can see, it's very strong, high margin business. The other great thing about these businesses, when the sun shines, they're very predictable income streams with potential for outperformance when we have really good weather. We've also got very strong management controls all across the business on costs. And in terms of free cash flow, if you look at our business, the free cash flow before debt, most of the EBITDA that we generate is then available for capital spending, debt repayment, interest and tax, or new projects. And they've just comment on the full repayment on Blackwater Valley. I think this slide is really just a kind of summing up how we envisage the future. I think long term, we believe that there are many opportunities to purchase family leisure businesses, which perhaps go rather overlooked by many people when they look at, for example, like Water Valley. We're going to have some challenges managing inflationary costs, but we believe we can match that off with price increases and just better savings elsewhere in the business. I repeat again, it is a very cash generative business, and the asset-backed nature means that we're quite attractive when it comes to borrowing to buy new businesses from the bank. And I think there is significant organic growth potential, particularly in like Water Valley and also in the golf businesses for new sites. And I think the other thing is that there is also the potential for attractive acquisitions in the midterm. That really ends our presentation. There is another slide at the back which just gives you a summary in the appendix on where we are in terms of the last set of published numbers, but you can see that all on the website if you want to have a look at it as well. So I guess
that's great, John, and thank you very much indeed for updating investors this morning. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to review those questions submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet company dashboard. John, and as you know, investors did have the ability to pre-submit questions, and perhaps if I may, I could start off the Q&A with asking you the ones that we received. The first one is as follows. If someone made an offer for your bar division, would you sell it?
I think, in life, everything's for sale, I guess, one way or other. We've been incredibly pleased with how the bars have performed over the last 6 months, significantly better than we ever expected. There are a lot less competitors in the marketplace, and I think it's a business that we want to continue with. But as I say, I can't ever say never, but if the price was right, we probably would. Everything is for sale in the end, I guess.
That's great. Thank you very much indeed, John. I guess a question around COVID and your experience over the last couple of years. But if travel is limited again this summer or later in the year, would this be good, bad, neutral for Brighton Pier Group?
I think, as I referred to earlier, in between lockdowns, then we did benefit very much from staycations. And of course, we all hope that situation isn't going to arise again. But I think we have a solid foundation in now, which is one of the benefits of the lockdown and the pandemic, the whole horror story, in that we have built these relationships with UK visitors. So whilst I wouldn't want to see it, I don't think it is particularly dangerous in any way to us. I think we have our audience, and we will cater to whichever audience is presented to us.
That's great. Thank you very much, Anne. And the final question, if I may. The group is led by high-quality assets such as Brighton Pier and Water Valley that have strong geographical barriers to entry and present attractive opportunities for reinvestment of capital. What criteria does the group use in considering future acquisitions so as to enhance rather than dilute the quality of the group's portfolio?
As I mentioned earlier, we're very much within the entertainment business, the leisure market. And what we look for in all our acquisitions is something that where we can use our skills and that where we have the experience. And we have wide experience in my management team. You know, we can manage retail, we can manage arcades, we can grow and develop fun fairs. So we look where we can use our skills and where we can absorb some of the central functions, if not all of the central functions of the business that we're targeting. So we look for what matches our skills. And I think that's the easiest way to explain that.
Thank you, Anne. Well, thank you to those that submitted questions ahead of the event. If I may, can I ask us to turn to the live Q&A? John, hopefully you can see the Q&A tab in front of you. If there's any issues, let me know. If I could just ask you to read out the questions and give a response where it's appropriate to do so. And I can see there's a number of questions around acquisitions that you've touched on, but perhaps there's added colour with any of those questions. That would be great.
Okay. A question from Simon that says, would you offer corporate sponsorship of the Pier, being one of the most popular venues in the UK? This could be easy revenue to capture. We do have some corporate sponsorship of certain things on the Pier. We have a big screen, which is last year was sponsored by Starling Bank. So yes, this is something we look at. I'm not saying that we would ever have the McDonald's flag flying over the top of the Pier, but we do look at sponsorship for rides and for various activities on the Pier. So yes, we would is the answer to that, but not in the sense of rebranding. Brighton Pier will always be Brighton Palace Pier. Another question from Michael. How competitive was the bidding process for Lightwater Valley? Did you retain the key personnel from the transaction? Well, we started looking at Lightwater Valley when there was competition for it before the first lockdown. And we had engaged in several conversations, and I think we'd become, the preferred acquirer for the two people who were selling Lightwater. Then, of course, lockdown intervened and things went quiet for a while. And as we got, into last year, we took up the negotiations again, and we completed the transaction very quickly because we saw the potential in Lightwater, and we very much wanted it. We have retained all the key personnel. There is nobody who has left at my request. We have the entire team still in place.
I would also add that when we acquired Brighton Pier, in fact, Anne had already been working on the Pier for what, 12 years? 12 years. And obviously she's now our CEO. I think it reflects that we generally, when we're doing deals, we're looking for the people as much as we are the businesses.
We have a question from Simon about how many full-time staff do you retain across the group versus seasonal recruitment. Obviously, we do have a high level of seasonal recruitment, but across the group as a whole, we have 400 full-time staff who retain what we call permanent staff. There are 200 on the Pier alone. And, these are very key members of staff who we've worked with in the case of the Pier for many years. Lightwater has a solid team of 40, 45 who have been there again. The average length of service at Lightwater is about 25 years. So with some very long-standing employees there, and we're very pleased that they've joined our team. John, maybe you can take.
Yes, this is a question from Sahil S. Asking us if we could give you a better steer on the kind of organic growth the company is capable of generating from June 23 onwards, both sales and EBITDA. There seem to be no 2023 and 24 forecasts in the marketplace. I think coming out of lockdown, it's been rather difficult to kind of see a kind of where this business is going over the next 2 to 3 years. Even up until Christmas time, we were still concerned that Omicron was about to hit us in a bad way and potentially have lockdowns coming our way as well. I think we are beginning to feel now that we can begin to see a future, and we will definitely be, I'm sure that our analysts will be putting some figures in the market for 2023.
Okay, and we have a question from Julian. If golf sites are such a high return on investment, why is the company not opening more? We are looking for more golf sites. it's not true that, you know, there are lots and lots of cheap sites that landlords are very keen to fill all over the country, but we are looking at golf sites at the moment. The cost of a new build is around £800,000, up towards £1 million. We are looking for them, and we will find them. And
yes, the last question we have is from Leonard Kay. I think that's the last one here on the list. And it says, in your January trading statement, you refer to market expectations. There are analysts who have written about our business and have have given some estimates of what the 2022 numbers would look like. And these were prepared by an analyst at Sencos. We will also be further updating the markets when we do our results on the 28th as to what we see the potential opportunities going forward.
I think that is it in terms of questions.
That's great, John, and thank you very much indeed. And
Thank you.
And thank you to all the investors that have submitted questions. John, and I know investor feedback is particularly important to the company, and I will shortly redirect investors on the call to give you their thoughts and expectations. But perhaps before doing so, I could just ask you for a few closing comments just to conclude, and then I'll redirect investors to give you their thoughts.
I hope it's come across to you how proud we are of our company and how determined we are to make our next acquisition, whenever and wherever that may be, as successful as the ones that we've made so far. And we hope you would like to join us on that journey.
I think I'd just like to add is I think when we were looking at March 2019 and the beginning of lockdown, things were looking pretty bleak for us as a business. And it is amazing really to see us here with a new business generating significant EBITDA. We were successful in getting our £5 million worth of business interruption insurance. And because we've diversified our business, we were able to open the pier in the summers, which, as you probably realise, makes up a huge part of the profits of the group. And so all being equal, I think we've done really well to get to where we are today. And I think it's a huge opportunity for us going forward.
That's great, John, and thank you so much for updating investors this morning. Ladies and gentlemen, please can I ask you not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the management team can really better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Brighton Pier Group, we'd like to thank you for attending today's presentation. That concludes today's session, and good morning to you all.